there, everybody. My name is Allison Ostrander, and I'm the Director of Risk Tolerance here at Simpler Trading. And in this video, I'm going to talk about a setup that I'm looking to play out within the next couple weeks. And so I'm overall looking for a move lower to the downside. That might not be too surprising to some of you. But in particular, I'm looking for a potential 200, potentially more, point move to the downside to happen within the next 2 to 3 weeks. And the reason why is from the setup that we have on the weekly chart itself. So a few things to point out here when we zoom out. First, momentum is definitely bearish with room to continue lower to the bottom of the axis. So we still have a little bit more room to go to the downside here before we might find some exhaustion. We have a bearish signal on the compound breakout tool, and we have a squeeze that's starting to fire this week to the downside. And we know sometimes those squeezes can last a few more bars lower for the actual move that's occurring. On top of that, when we zoom in here, Bollinger Bands are still opening to the downside. The 10-period simple has rolled off of the 30, and both are below the 100. So this is now officially a stack down formation on the weekly chart. But also specifically what's making me target that potential 200 plus point move lower is from the bearish divergent bar that printed last week. So this year specifically, I think all but one of our bearish divergent bars have followed through in some way with a lower low within our 3-bar criteria, or that's my rule at least, to see it follow through with a lower low within 3 bars. The one that did not work out with the immediate 3-bar lower low was this one, and it worked out with the 4th bar, arguably. So if you gave yourself just a little bit of extra time, you might have still benefited from that trade. But when we go back and look at all the bearish divergent bars this year, a lot of them from the close of the bearish divergent bar into 2 to 3 weeks, but usually about 2 weeks later, have seen a nice 200 plus point move lower right around there. So here, for example, bearish divergent bar, we closed at 46.77. 2 weeks later, we had a low of 43.95. So that's definitely over a 200 point move lower, almost a 300 point move lower. And then of course that 3rd week definitely followed through with that bigger move. Here we had a bearish divergent bar. The close of it was at 4,500. 2 weeks later, our low was at 43.58. So this one was a little shy of 200, but once again, definitely that 3rd week follow through gave you that over 200 point range. Here, this bearish divergent bar, this would be one of the few where I'd argue didn't quite follow the rules on the 2 weeks. So this one closed at 43.28. The low of the next bar was 41.57. So just shy of 200 points. And then of course it didn't quite follow through with that stair step down the 2nd week like we've typically seen this year, like with this one, for example. This one was a bearish divergent bar, closed at 45.45. 2 weeks later, we were at a low of 43.81. And then, of course, that 3rd week definitely followed with over the 200 point move. And that week also actually printed a bearish divergent bar where that one closed at 42.71. And then 2 weeks later, we are at 40.62. So just a little over a 200 point move. Definitely that 3rd week, notice the bigger follow through. This was the one bar where it didn't technically follow through this year, unless you held it for a full month, which if you did, the close of the bar was at 3,900. The low 4 weeks later was at 36.36. So still over a 200 point move, you just would have had to hold through some heat. But maybe you would have doubled up on this bearish divergent bar, which closed at 41.08. And definitely 2 weeks later, still saw that move to 36.36. So well over a 200 point move on that one. This one technically followed through with the lower low within 3 bars. But this is the other one where it didn't quite follow through with the stair step down that we would typically look for. So it closed at 38.25. The low of that bar technically was 37.38 that we were trying to get back below. And we did that here with a low of 37.21. So we followed through on the lower low, but we didn't get that stair step of plus 200 points we were looking for. This next bearish divergent bar did, however. We closed at 42.28. 2 weeks later, we had a low of 39.03, so certainly well above the 200 points. This bearish divergent bar printed, we closed at 38.73. 2 weeks later, we were at 35.84. So you guys are kind of getting a pattern here, right? That the majority of the time we have seen around, if not more than a 200-point move lower within the next 2 to 3 weeks of when this bar prints. And knowing that we have the volatility of potential news this week, knowing that the overall pattern at this point still looks overall bearish, I'm very much inclined to look at a potential down trade that could bring us from around this 3,600 range to maybe around 3,400 in the next couple weeks. Now, keep in mind that you want to be mindful of your risk. The news could very well, who knows, maybe the Fed surprise us and they're like, just kidding, we're going to stop all this rate nonsense and we'll get back to how we used to do it with the easing. That could cause a huge pop in the market for whatever reason, right? Now, I doubt they're going to say that, but we have to be mindful of our risk no matter what. So I wouldn't necessarily load the boat, y'all. But what we could look to do is maybe go out in time, and we could do this a little bit more conservatively, where we give ourselves the full 3 weeks. So you would look at this week, then next week, which is the monthly, and then maybe one more week after that. So maybe the end of month expiration is where we look to do this. Or you could just do it the 2 weeks out, because like I said, that's the most common, happens within 2, if not 3 weeks. But let's just be a little bit more conservative this time, and we'll go to the end of month. Well, if we're anticipating roughly a 200-point move from the close of this bar, that should put us right around 3,400, if not maybe lower than that. So what could we look to do here as an inexpensive trade idea, but still allow ourselves a very nice profit potential? Well, one of my favorite strategies to use in this volatile market environment this year has been the broken wing debit butterfly. So let's price out something like that. The 34.50, 34.25, 34.05 is $1.60. Now, the spread width difference here is 25 points on one end and 20 points on the other. The debit spread, if you notice, is slightly wider than the credit. This means if it goes completely in the money, my trade will actually still cash settle for $5 and allow me a nice profit based off the 160 risk. If we only go down roughly the 200 points and stall at 34.25, or maybe within the 2 weeks we get that move lower and then bounce, kind of like what we've seen on these bars here, right on that 3rd week follow through, then certainly this might not be a bad place to have a pin, which has a max profit potential of 23.40, right? So not a bad risk versus reward, but let's say we're right on the direction but wrong on how big the move is. Well, it still allows us that profit if it goes completely in the money. And of course, you can determine however you want to do that trade and strategy. Maybe you want 3,400 exactly as the pin. There's a lot of open interest there. And you do the 25 but 15 because you want a wider spread width if you go completely in the money. Well, that's a 220 cost basis, but if it goes completely in the money, it will settle for 10 instead of the 5, right? So you can play around with this strategy and make it work for you, but I would say to keep it as a broken wing where the debit spread's wider, just to give yourself a little bit of flexibility in case the spread goes completely in the money. So use whatever strategies you want to implement there, but basically that is what I'm looking for within the next couple weeks, if not this week, right? Given the news, it might be one of these kind of events here. But ideally, we'll see that point drop that matches with the chart pattern and everything else. We could look to place some butterflies down there, and then from there, right, we'll see how the chart looks to see what next step we want to take. Thank you so much for joining me in this video. I hope y'all have a great rest of your trading day. As always, may the trade be with you, my fellow Jedis. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.